So looking at some of the reports, this was EtherGrew on, I believe, Facebook. So breaking Tom Lee's Bitmine is currently carrying an estimated $6.9 billion worth of losses on Ethereum. Company stock has collapsed nearly 84%. Delisting risk is now on the table. I don't think delisting risk is on the table right now. And full balance sheet stress is emerging. I also don't think that this is emerging at the moment. So I don't agree with the last 2 points. I think it's a lot more fear-mongering than anything else. But yes, it has collapsed over 84%. And also there is a substantial loss, unrealized loss sitting on the balance sheet of almost 40% from the moment they have began purchasing. Ethereum have become one of the largest treasuries for Ethereum, down over 6.9, almost $7 billion. And this is happening before a confirmed bear market phase. Risk is building faster than most realize. Now, this I do agree with. I think Ethereum is still in the early stages of where it's selling off. It is down from its all-time highs of well over $5,000, about 50%. It's been cut in half. But we know with crypto, things can get much worse. Just when you think that things cannot get any worse, think again. Because we've seen these cycles before where crypto has plummeted well over 66, almost 70% here for Ethereum. This right here was back in 2021 where Ethereum was down over 80%. And of course, Bitcoin is also dropping over 30 to 40% right now. So from its all-time highs of well over 124, right now we've got Bitcoin down over 38%. This is nothing. This is like literally a drop in the bucket, drop in the ocean compared to what this can get down to, right? So if we were to see a bigger sell-off, 60 to 70% on average is very, very normal. And also, if you take a look at Bitcoin's chart, it starts to look a lot more like a head and shoulders. So this right here is the shoulder. We've got the head, we've got the shoulder, we got the head, and this right here is potential forming a right shoulder. If you do get a breakdown, I do think $53,000, $54,000 is also a possibility. Not saying that we're going to see that, but it's also a possibility in case we get a breakdown below this head and shoulders and this very important support level at just under $77,000. In fact, we had buyers stepping in right there for Bitcoin. And for Ethereum, if you are looking at the next support, if you're looking at the next target, unfortunately, it's going to be sitting all the way down here. That's around 2150 to 2200. So that's going to be first level all the way down to as much as 1600 on Ethereum. So we validated this level here in the past, and that is going to be that next support in case we are not able to validate it and find support at 2200. So this right here has been the entire sell-off for Ethereum as well. So coming back over to the net asset value. So again, looking at $2,400 price for Ethereum. Ethereum, they've got about 4.167 million Ethereum. And so now at 2,400, their Ethereum value in the balance sheet is just over 10 billion. Cash is sitting at over 900 million. So total sitting at just under $11 billion. And just take a look at how much of a difference it makes if we were trading at $3,500 for Ethereum price. Their Ethereum valuation was almost $15 billion. So that, of course, is a $5 billion of unrealized drop in the value of Ethereum that they have on their balance sheet. And as a result, total liability is still very, very low. So that's why I mentioned there is no stress on the balance sheet side. But yes, the bigger question is, right? Why? Because it trades on Ethereum. So we have to obviously do our analysis on Ethereum because BMNR itself is not a standalone company generating substantial amount of revenue or profit. It is, at the end of the day, a treasury stock trading on the value of Ethereum, which is the underlying asset that it's built on. So as I said, to $2,400, even right now, the balance sheet is pretty strong. Net asset value sits at just under $24 per share. So that is the price that we could expect from BMNR going into next week, which is obviously going to be breaking down from this descending triangle as well. $23 is going to put right here is the downtrend with the lower highs coming in. And if you do get a breakdown, which we most likely will on Monday, we'll find out very soon. $23, $24, I think, is where we're expected to open. So reading further, this was Noble. Tom Lee's Ethereum target when he launched his treasury company BMNR last summer was $15,000 by January 31st. 2026. As we approach the target date, the current price is $2,800. got it wrong by 80%. And there was much worse things also listed down in this post. I don't want to go over it. I don't want to read it. But the only thing that I really want to take away from this is why we don't predict. It's exactly the reason why I don't like to make predictions. I would never come out and say that I think that by this time, this stock is going to be trading at this price. You see, I'm doing three things in that statement. I'm putting a time, I'm putting a stock, and I'm putting a price. All those three things are predictions. And I know for a fact that I will never be right predicting the future, at least not consistently. I may get lucky once or twice, but I will certainly not be consistent in predicting. And that's what we have to take away from this, right? Whenever someone makes a prediction in front of you, just take it with a grain of salt. In my opinion, I would even write it off because nobody really knows the future. Nobody knows what's going to happen, right? The world is so uncertain, full of so much uncertainty. It's gotten much more uncertain after Trump took office. It's impossible to really know what's going to happen in the future. So BitMine warned that gold and silver's explosion moves are creating a vortex that's sucking investors' attention away from structurally strong themes like AI and crypto. And Lee explained the metals rally is diverting capital from crypto because traders are tying up funds in gold and silver momentum trades, with gold crossing $5,000, silver hitting $110. Lee noted that October crash crippled many of the key players in the industry, some exchanges and market makers, leaving crypto without the leverage that typically amplifies rallies. So
it happens. It happens. Now, in today's video, let's focus on, well, the upcoming earnings week and companies that are yet to report their quarterly figures. Before going over it, if you enjoy this type of videos, hit all the buttons, would really appreciate that, especially the notification bell so you don't miss any of the future videos. Thank you very much. And for support me even further, do check out the link down in the description and in the pinned comment to the top 10 best stocks to buy now, or go to fool.com/countryinvestor. Thank you very much. So over the next couple of days, it's going to be very, very busy. On Monday, you have, before the market opens, also I think this is the first time, Walt Disney reports their quarterly figures. I think Bob Iger said that he's going to finally step down at the end of his, God knows which term that is. So we're going to have to wait and see who's the new CEO of Walt Disney. I think the process will take a while, but that's Monday before the open. And then after the close, you have a big one. Of course, that's Palantir. We'll touch on that a bit later because Palantir is a very, very particular case where you can make the case of maybe buying more before the earnings report. Some people will tell you you're too crazy, you should be selling before the earnings report. So we'll talk about that. Tuesday is a big day because Tuesday before the market opens, look who we have there. Numero uno, we have PayPal. PayPal reports Tuesday before the open. We're of course going to be live on the channel. This is going to be a very, very interesting one. Now, surprisingly enough or not, I'm putting PayPal in this video. I'm saying I don't think it's worth buying before the earnings, despite it being extremely cheap and undervalued right now. I'll explain why. You also have PepsiCo, Merck, Pfizer before the open, and then after the close, another big one for me particularly, I think for a lot of the viewers as well, you have AMD, previously Advanced Money Destroyer, now turned into Advanced Money Doubler. We'll talk about AMD as well. Supermicro, Chipotle, Enphase, and some others. Wednesday, to me as well, important. Uber before the open, Eli Lilly, Novo Nordisk. I mean, the fact that both of these names are reporting before the open, great timing. After the close, the big one, Alphabet. We also have ARM, Qualcomm, Snap, Elf. We'll cover as many companies as possible on the channel. Thursday, you have ConocoPhillips, Bristol Myers Squibb, Shell, Estee Lauder, Energizer before the open. After the close, important ones for me, Amazon, Iren. You also have Strategy. I mean, with the recent crash in Bitcoin prices, I wouldn't be surprised. Bitcoin and Ethereum, crypto as a whole, actually. Crypto as a whole. I mean, Iren right now, as you know, the majority of its revenue does come from Bitcoin mining, not that much from AI cloud. We'll touch on that. Roblox did come down. All of the, Roblox, Unity, gaming companies did come down because of what Google released yet again, right? With a couple of prompts, you can create a game. Now, it's great. I think it's a way for gaming companies to maybe accelerate the process and make sure that games come out much faster, maybe updates come out much faster as well. For some companies, it might create a problem, but for a Roblox, I don't see how that's a problem because Roblox is a platform. It's a platform with millions and millions of users. I don't think that should be a problem for them. Maybe it's a buy the dip opportunity here. Reddit also reports Bloom Energy, Affirm, Atlassian, all of that Thursday after the close. And then on Friday, if I'm being honest, nothing really interesting. And so let's talk about a couple of things here. Why is our friend Stanley Druckenmiller here on the slide? Well, I'll explain. So a couple of things. One, selling before earnings, buying after earnings, buying before earnings. What do we do? Why do we do it? Selling before earnings, why do we do it? Well, it may be trimming, so you are less exposed to a potential drawdown in case you're holding a company that has run up substantially. Good example here is, of course, Rocket Lab and also AST Space Mobile. Both of these stocks have crushed the market. Both of these stocks are up substantially. Both of them are extremely expensive. Right now, AST, the estimated earnings date is March 2nd, and the confirmed date for Rocket Lab is February 26th, so we still have quite some time. If we look at the expected number for the upcoming quarter, that's this one right here, $178.18 million, an increase of 34.5% year over year. With AST, we're looking at this bar right here, $39.5 million, a huge, of course, increase year over year. But even if you look at 12 months forward, December, well, fiscal year 26, only $69.5 million for a multi-billion dollar company. The same could be said here for Rocket Lab, although Rocket Lab is expected to have, that's per quarter, by the way, $269.3 million in revenue. This is the guidance that they gave us 3 months ago. The thing with a Rocket Lab and an AST Space Mobile, little dumps happen quite quickly, right? In one day down 10% or 7%. Usually that's what's happened with high beta names, high growth stocks. I own Duolingo. I'm down over 50% on that small position. Duolingo, as you can see, is still expected to grow quite quickly, although growth rates are coming down. In my eyes, still a good company, still a very profitable company. I think the strategy is going to work out. But, this is the big but, I didn't sell, by the way. They will report at the end of February as well. But with Duolingo, maybe suddenly I like Rubrik at $55 more than I do Duolingo at $130, $140 or so, despite me being down on that position. And so in this case, I could be selling before the earnings report, or I could just say, you know what, let's wait. Because they'll report before Rubrik, let's wait. We already had the preliminary numbers, which are fine, but we don't get the full picture. We don't get the comments from the earnings call. We'll get them at the end of February. But I'm giving you a personal example. For Duolingo, selling before the earnings report could make sense for me because maybe I want to add just way more to Rubrik because I do feel that Rubrik does not have the same headwinds or, let's say, big question marks as a Duolingo has. Rubrik still expected to grow very, very quickly. And now with this AI agent story, things are running wild. I think cybersecurity spend is going to accelerate over the coming years. Moving on to PayPal. What did I say at the start of the video? PayPal. Why not buy before the earnings report? Well, first of all, you do whatever you want. Me, I'm already overexposed, options and shares. But there is zero reason for me to be buying before the earnings report. Why is that? Stock has gone down quite a lot. There are still some question marks. One, did you buy more shares this quarter or not? Are you going to increase your buybacks in 2026 or decrease? If they did not buy more shares this quarter, and if the buybacks are not going to be at least the same as 2025 for 2026, it's a big problem. Then, OVAS, other values added services, I think we should be getting closer to $1 billion a quarter in 2026. Guidance for 2026, we know that EPS is going to grow slower than 2025. They're also going to invest a lot more, but it's still going to be positive. But how positive? What do you expect for 2026? If I see that they are, okay, they are optimistic, they are positive, they're talking about buy now, pay later, they're talking about Venmo, they're more focused on branded experience and less on branded checkout, they actually tell us about PayPal ads, then I'll be like, okay, stock is probably going to go up substantially. Well, hopefully, I don't know, wishful thinking, maybe. But if we start to get a little bit more optimism from the company, from management, then I don't mind missing the initial, let's say, 5% jump, 10% jump, maybe more, who knows at this point. And then the day after, or since this is before the market open, when the market opens, maybe I'll buy even more shares. But with PayPal, for me personally, I don't see why I should be buying before the earnings report. I'm definitely not selling before the earnings report. And the same for another name, although it's not as misunderstood as a PayPal, or not as crushed as a PayPal at all, that's Uber. Uber is still expected to grow close to 20% year over year revenue here. But as well, the market is expecting that growth rate to decelerate. Now, the big question with Uber is not, oh, is the business doing well? The business is doing very, very well across the board. The big question here is of course the autonomous vehicle play. They have big plans for 2026 and even 27. So I do think that that's the main topic in the earnings call. I think so. We'll have to wait a couple of days to find out. This is also one where right now I don't feel the need to sell before the earnings report. But if you feel uncomfortable owning a name like this because of the question of autonomous vehicle, then yeah, maybe sell. The thing here is your portfolio should not stress you out. If you feel stressed about a particular position, I've talked about this during a live stream. If you feel stressed about a particular position, sell it. Because if you don't, you'll feel stressed and you'll make silly mistakes. Sell and buy something you don't feel stressed about. Moving on to another name that will report at the end of February, and that's the Trade Desk. I did already talk a little bit about the Trade Desk in the other video, but I said I don't think it's worth buying before the earnings. It could pop because the numbers are better than expected, but it is a company where right now, especially after this 8K that came out, they reiterated their results, which means we're not going to see a solid beat, which is something that we're used to with the Trade Desk. And there is another transition, in this case, another CFO transition. It's also something weird because they told us that it's done. The whole restructuring, the executive suite and all of that, it's behind us. So why is this happening yet again? When you own companies where you suddenly have way more question marks than anything else, sometimes it is a good thing to maybe reduce your exposure or exit completely because you like other opportunities. I'll repeat the same thing again and again. Your job is to make sure that you buy good companies at good prices and you feel good about it. You don't feel stressed about it. The Trade Desk could very well be a very good company to own in the future, but based on the questions and the non-answers that we have right now, it's maybe one where let's wait and see. Moving on to a neo-cloud player. In this case, I will talk about Iron because they report over the next couple of days. And as you can see here, yes, okay, the growth rates are coming down, but it's still expected to grow very fast and actually see an accelerated growth from here on out. Yes, I know the ARR, $3.4 billion in ARR, but that's ending 2026, is still there for now. The problem with an Iron is that one, the stock, of course, has gone up substantially over the last 12 months, over the last, 6 months, 9 months or so. As well, it did also come down for sure. Yes, I admit it. I still own all my shares. But if you look at the revenue has, of course, grown quickly year over year. But the reason why we are being priced as a neo-cloud player